Situation seems to have gone from bad to worse. Food outlets have been closed and the country is running short on basic necessities, including food, petrol and medication. Zimbabwean lawyer Brian Kagoro joins us now in studio to unpack the situation there. Brian, it's being called the worst economic situation in Zimbabwe in a decade. Just perhaps give us some background on how we've gotten to this point.
There was already a crisis, a liquidity crisis in the market. When the new minister came in and he announced a monetary policy, which would have introduced a new tax on transfers, RTG transfers. This caused the market, the speculative nature of the Zimbabwean economy was such that people hoped that the bond would tank against the dollar. So they started speculating. Anybody who had a Zimbabwean bond was buying goods or disposing of it. And that meant that you had a shortage of US dollar for everyday transactions. And this triggered, so the domino effect across sectors. You had people buying and hoarding certain commodities, and also because you only could get so much out of your bank account, there was a system-wide panic that happened. So that's the one thing. But the other thing is that the fundamentals have not yet been fixed. The bond, Zimbabwe dollar, is overvalued. The value of 1-to-1 to the US dollar is not anchored on any fundamental. The economy is not yet at that level of production that would justify that. So we suspect that this may lead to a demonetization of the economy. Just remove the bond or allow it to die a natural death. So there is a component of recklessness, but also perhaps a component of design on the part of the government's new policy.
I mean, this is a difficult thing, a difficult pill to swallow surely for President Emmerson Mnangagwa. This is not how he would have wanted to start his first term in office.
I think that what should have been appreciated by everybody is that turning the economy around was going to be a very difficult and painful process. The difficulty with the Mnangagwa government is that they have preached austerity, but the government continues to spend like a debt alcoholic. They spent between November 2017 and this September more than $5 billion. And that's a whole lot more than Mugabe was able to spend.
And where was that money going?
Recurrent expenditure, paying salaries, meeting government running needs. Mostly the salary bill is so high, almost 70%.
Was that not one of the things that Mnangagwa said when he first came into office, that was one of the first things he would do was to cut down on his cabinet?
Well, cut down on cabinet, but the civil service is bloated. What happened over the years is that political party activists, apparatchiks, were placed on part of that state funding as youth officers, and all sorts of posts were created. A reserve police force, reserve army, kept on swelling the ranks. This was employment not in the critical sectors, but it was employment to deal with the political accommodation. What Mnangagwa would have to do is to risk a backlash from his own party and his own supporters. There is no way around it. I think that we all have to accept, especially Zimbabweans, that you can't have a government that spends, burns cash or burns and expects citizens to pay more by way of taxation. If they are borrowing money at the moment to finance government deficit and spending. So that is what keeps the fundamentals a bit shaky. So what needs to happen going forward, and this is particularly important for Mnangagwa, he won the election with a very slim margin. Within certain sections, his presidency is disputed. Within the ruling party, he is still a polarizing figure. He has made many grandiose claims, and the only way to turn this around would be to find some accommodation, not just with the opposition, but with other actors. I think that what the government is trying to do is to do reform on steroids, but not having sufficient buy-in, consent and consensus from different stakeholders. I think a tripartite negotiation forum with labor and the informal sector on the one hand and business to discuss and thrash out policy before it's introduced would have been helpful in soft landing some of the attempts.
What is the opposition MDC Alliance's Nelson Chamisa saying in the wake of what's unfolding in the economy?
Clearly, the opposition sees this as a demonstrative of what they always claimed, that ZANU-PF does not have a solution to the economic crisis, that ZANU-PF is part of the economic problem. But the truth of the matter is that the economic problem may be partly contributed to by the profligacy of ZANU-PF. But the fundamental issue is that the structure of the economy or the structural questions need to be addressed, whether you have an MDC government or a ZANU-PF government. Yeah. Scaling down on some of the, and this is a very delicate issue because redundancies in this particular political situation would be a lightning rod for political instability in the country. But retaining the bellicose civil service the way it is would equally be disastrous economically. So you either have good politics and bad economics, or good economics that undermines your political sustainability.
I mean, I think the people of Zimbabwe, that would be an easy decision for them.
Well, no, there's no real easy decision. I think that if we all just put off our political jackets and thought just as citizens for a change, the solution to the problem with Zimbabwe is fundamentally political and governance related. The reflections on the economy, some of the bad decisions made, were political decisions that have had undermined any potential of economic recovery and the work of entrepreneurs, of business folk and stuff. Raising tax bans without talking to employers creates hostility amongst the workers. So there was a protest after a very long time by the Congress of Trade Unions that were arrested, contrary to the new dispensation claim. And then you have employers unhappy because they know the people who are working for them are not happy clients or happy campers. They earn little. The price of basic commodities has gone high. The cost of living is unaffordable. So you have people who work basically to pay the government, which burns cash, and the crisis of livelihoods will at some stage become a bigger political crisis. The rates went down, as you know, after the minister announced that they've gotten funding from Afreximbank. The rate went down. So it went down drastically. Yeah. Whether this is maintained will depend on the fundamentals. So you end up with a yo-yo if the fundamentals are. So today it's down, and maybe come next week it goes up, whether moderately or more, because the shortages are not simply. So we're seeing a stabilization based on two factors. The number one is that we don't have stocks of certain things that you need, and certain companies shut down under the guise of renovating, opening next week. So basically the demand for the US dollar and the market lowered because the major trading entities shut down in anticipation that there would be a bigger crisis. When they reopen with the prices that have been reintroduced at a lower rate, you have people who bought cooking oil for $26, the price has gone back to $3. You have people who, in panic, took savings, the bond notes that they had in the bank to try and buy assets, and they bought them at an exorbitant rate. So you have created a vicious poverty cycle that we will only know the full effects come end of November, going to December, into the festive season, because some people have liquidated money that they had because the corrosion or erosion of their savings that was happening over a period of 5 days was phenomenal. The bond note moved from 1 to 1.5 or, to almost 400. And it's ridiculous to have a 400% devaluation in less than 5 days.
Well, it's an ongoing situation in Zimbabwe. Thanks very much for coming in and giving us some clarity on some of those issues. Zimbabwean lawyer Brian Kagoro joining us in studio as we continue to track the economy in Zimbabwe.